Good morning, traders, and welcome to Pre-Market Info. I'm Dennis Dick, and I'm here with Joel Alconin, and we are got a packed show here for you today. We are going to start the show talking about this retail price improvement. All this is a big scam to jump the order queue and make your limit order lose execution priority. We're also going to talk about earnings fade plays, where stocks like Microsoft and IBM have rallied off their initial reports but then given the gains back. We'll analyze AT&T, DuPont, Altria, and UPS. They've all had earnings here this morning. And Pfizer, Johnson & Johnson, Elon, they've had a group effort on an Alzheimer's drug. Failed an initial study. Those stocks are down on that news. And then tonight's big dog, Apple.
Dennis, it sounds like you got up and took your 5-hour energy there. You're raring to go. Let's just get right into this price improvement, or let's call it lack of price improvement. There's going to be an article out later today. I mean, this is something that not many investors are aware of.
Yeah, what we've been talking about and what I've written a couple of pieces. I have one there on the site that I wrote there a while ago. I republished it last night just because it's relevant here now with the NYSE's new retail liquidity program. And not saying the NYSE, this has been going on long before the NYSE. They're just now participating in it as well as of next month. But what basically has happened, and this is the whole gripe, and actually Nanix is going to have an article on this later today, which is what you were saying, which I will link to once that is published. But basically, here's the gripe, is that you get a stock like, and this happens in all stocks, but you get a stock like Bank America. Let's say it's bid $6.98, offered at $6.99. You see all these prints going off at these sub-pennies, where it's 6.9801, 6.9899. Why do you see that? That's the question. And here's the answer, because there's participants that are taking the opposite side of retail market orders and stepping in front of the 698 bid and the 699 offer. So basically, they are jumping the order queue. And they're doing this by buying order flow from retail brokers. And they justify the practice by saying, oh, we're giving retail price improvement. This 1/100th of a cent, this 1/100th of a cent off this, and these 1/100ths of a cent add up to all this price improvement for the retail guy. But they're not considering that they're stepping in front of another participant who was bidding or offering, or who was bidding at 698, and that participant didn't get filled. So that participant, once they're not filled, can do one of two things. They can just not be filled, or they can pay the spread. And the spread on Bank America would be a penny. So even though you save one retail customer 1/100th of a cent, you cost the limit order trader 99/100ths of a cent. So it's basically just stealing money from the limit order provider, the retail liquidity provider.
And for the folks that are thinking, well, this is, he's talking about, pennies here and hundreds of pennies, but here you have a stock that's trading 170 million shares a day.
Oh.
With order flow coming in and 5, 10, 50, 100,000 share orders, all those sell pennies add up.
They all add up, and that's the problem, is that most people don't even know that they could have been filled on the order. That's the biggest gripe, is that you might be bidding at a stock, you might be the guy bidding at $6.98, you don't get filled, stock takes off to $7, $7.05, you didn't get filled, but you should have been filled. Somebody was trying to sell to you, but there's some privileged participant, they're called internalizers, high frequency internalizers, where they'll step in front of your order at the moment it's about to be executed. So just
also they should take note that this only happens when there's tight spreads and very little volatility, and there's very risk to the internalizers when they're taking this order flow.
Well, to be honest with you, Joel, just to correct you, it happens in all stocks, but this is what they do. It's very prevalent in a stock like Bank of America because there is very low risk, and they want to lean on the bid. But they do it in all stocks. They do it in thin ones too. If the stock's got a 50-cent spread, they can step in front of the low bid, step in front of the high offer, and make the 50-cent spread. It's just a big game to make the spread and jump ahead of the order queue, and it's a complete scam. And that's something needs to be done about this. Like, we need regulation here, stepping in and stepping up for the market here, and stopping this junk from happening. This is the one thing. These types of scams here is why investors are losing confidence in the market.
And for those who would like to differ with us and say, they're providing price improvement and this is improving liquidity and adding to the trading flow of the market, then how come the retail investor cannot end orders in sub pennies? Why can't everybody use sub pennies? I mean, is it just for a privileged few?
That's
Why can't the retail investor be able to enter a Bank of America order at 6.902648? Why not? And that was the thing from when decimals, came on. I said this is going to destroy the market structure, and now they went from pennies to sub pennies. And where are they going to go next?
Yeah, that's just it. Where are they going to go next? And how do you? I just don't know how you can justify this practice for this long. This has been going on for years. We've been complaining about this for the last 3 years here, and nothing's been done. And they just continues to get worse. And now you have the NYSE actually going to participate. Can't blame the NYSE. I mean, they're losing all of their order flow to these off exchange over the counter market makers. So they have to participate, and start to get in the program as well, because there obviously isn't going to be any regulatory change here. It's been 3 years. The NYSE was complaining about this 3 years ago too. Just a big scam to step in front of your orders. Another problem in the overall market structure, and this is a big problem. I almost think this is the biggest problem, is stepping ahead of your order by a sub penny when you can't even place a sub penny order. If you try to place a sub penny order, it's rejected. SEC Rule 612 forbids you to place from trading in sub pennies, but broker dealers and over-the-counter market makers are allowed to trade in sub pennies to provide retail price improvement.
I got an idea for you today, Dennis. You need to start a retail no sub penny fill campaign. That you don't put your orders in sub pennies, and you don't want them filled in sub pennies.
That's just it. You don't want them filled in sub pennies. And read the piece that I just wrote here, and read the Nanix piece when it comes out. This is important for anybody that's got a retail trading account. This is very important. This is your orders it's affected. It affects everyone, because it not only affects the retail guy, it affects whoever's displaying order. And this causes liquidity in the markets to go down, because what is the point to bidding for a stock when there's a privileged participant that has the ability to step in front of your order at the moment it's about to be executed? There's no point to bidding and offering stocks, no point to providing liquidity, and that's why we're starting to have liquidity problems, and when we need it the most. That's why we have things like the flash crash happen. Crazy, crazy, crazy. We better move on here, or we're going to talk about this stuff all day. I just wanted to highlight a few earnings plays here. Just let me change here layouts. I'm just changing over here, Joel. Okay, to the new layout.
There's several stocks. I mean, we talk a lot about the pre-market activity and what goes on, and we don't necessarily encourage traders or investors to necessarily trade in the pre-market. What we try and do is point out activity, unusual activity, especially in the big caps. Stocks that trade 20, 30, 40, 50 million shares a day. What do you have? We'll start out with perhaps Microsoft here. Going back to last Friday's earnings report, it was interpreted as a good report, skyrocketed in the pre-market over $1. I mean, Microsoft moves $1 in a week.
Yeah. Microsoft actually, after the report, it traded initially down, and this is what we're talking about, these earnings fade plays that have been working. Initially traded down 29.70, then it rallied all the way to 31.50. That was in the after hours after it reported. The next day it opens at 31 and goes straight down. So if you were fading that play on Microsoft, it worked very, very well in both directions. These earnings fade plays have been working. Another one too is IBM. IBM opened up, obviously rallied huge on their initial report. It's given back almost the entire gain here now 3 days later. So it's not even short term, even for you swing traders out there. So, and this is only working on the big caps. It isn't really working so much on the mid caps or the small caps, but on the big caps, the earnings fade plays have been working.
Okay, and just in reference to this IBM, what you saw was a gap up from 188.21 to 192.97 was the low. The stock rallied almost to 197 that day.
Yeah.
Okay.
Yeah.
So really was there that much of a supposed increase in earnings or forward projections to make that stock move almost 13 or 14 points? No way. It's just the lack of volume and
Lack
high
of
frequency
liquidity.
trade.
Yep.
Yeah, lack of liquidity, and lo and behold, that move didn't hold. And yesterday we came down to 188.20. We highlighted that on the show yesterday. Filled the gap from the earnings. 188.59 was the high, and just kind of meandered our way back up. So I mean, it's volatility, and it's great. It'd be nice if there was some volume associated with the volatility.
Yeah, well, that's just it. We've knocked out so many human market makers now. It's machine driven. It's just machines trading with other machines. So you basically have a lot less liquidity out there because you've knocked out so many human traders. There's not a lot of rational thought. So stocks are just all over the place. They even have trouble finding their values here lately. I mean, let's look at GE even after the report. That was up, down, left, right after the reported earnings there. Went up to 2013, tanked to 1945, rallies to 2030, obviously sells off yesterday, rallies again. It's still trying to figure out whether the report was good or bad. Halliburton was the same thing yesterday as well. In the pre-market, we highlighted this. It was trading up at 31.5. Tanks right at the open, goes all the way down to 29.37, then rallies all the way back to 31.5 again. I mean, where are these stocks? It's hard to even figure out where they're going. There's so much volatility after these earnings plays. And why is that? Because high frequency traders don't want to trade when there's risk. So if they don't know where the price is for sure, they just don't provide liquidity whatsoever. And then you have this vacuum where there's just no liquidity because, like we were saying, you knocked out all the human market makers. So when the high frequency traders aren't providing liquidity, nobody's providing liquidity, and the stock can just go anywhere. It's crazy. It's crazy volatility. When you see a stock, oh, it's up $1 on earnings. Oh, now it's down $1 on earnings. Now it's up again. Check out VMware. Check out that one from last night. That stock traded. Well, first of all, last week they announced that they pre-announced the stock rallies. I'll bring you up the daily here on it. The stock rallies basically $13. You see it there, Joel? It goes from $80, gaps up, keeps running. Then last night, they actually announced their actual earnings. The stock sells off from 89 to 84, goes back to 89, sells off again, and now it's trading at 86. These things are like yo-yos.
Yeah, just going back. I mean, we could talk about the volatility and say what the causes are and what the causes are not. But just using that GE example, if you could just monitor the pre-market activity and say, you know what, look at this chart of GE. 1950, it's just been one hell of a level.
Oh.
Okay, and if you were patient, and I also talked about this yesterday. When you have that many lows in the area, looking back on the daily here, going back to July 10th, all the lows between 1950 and 1960. I mean, if you are firm in your convictions on what you're doing and you put orders in, you can use this volatility to your advantage. I mean, I wouldn't recommend, something's rallying up, going in with the buy crowd. I would say have your numbers, have your parameters, let the market come to you, get filled, have your exit point, and have your target. Similarly, in that Microsoft move, I mean, for that thing to go up to 31.50, okay, let's even take that out of the question, okay, because this thing was at 31.54 on May 11th. So whoever was out there on May 11th was back there on Friday. But let's say you just forgot about all the pre-market activity. You waited for the stock to open. It opens into basically major resistance from 31.05 to 31.14. Doesn't even hold that for
Not even
minute.
a minute. No.
Not even a minute. Okay. So if you're going to use momentum, this thing is up on the 9:30 open. The true liquidity comes in, and the true sellers came in, and the trend was developed very, very quickly.
Yeah, straight down, Hags out, and then straight down again yesterday. So it's a great point there, Joel. Let's talk about the earnings here today because we've just had AT&T report here just a little while ago. And talking about earnings fades, what's the high there on AT&T from this morning?
AT&T, it got just over $36
Yeah, and we've been talking about this, sir. So there's your point again. These levels, if you've got these levels, this has topped out multiple times here around 36, and the pre-market goes all the way up, trades just above 36, and starts to give it back again. There's your earnings fade. If you're looking at these numbers, you knew 36 was a big number. We topped out there in late June. We topped out there. We got just above there in early July, earlier this month. We topped out there a few days ago as well, and lo and behold, it gets up in the pre-market, gets above 36, and starts to come down again. We're now at 35.66. So there's your earnings play again, where the fade is even working here this morning.
Yeah, AT&T is interesting. You had a new 52-week high and multi-year high back at the beginning of the month, 36.21, and then last week on Wednesday you got up to 36.19, closed at 36.19, and then sold off under a dollar under 35. We've been talking about a lot on the weekly outlook, this 35 to 36 range. Looked like it's going to come and play today. Going to be rough sledding from 36 all the way up to 36.21. Above that level, of course, you perhaps have another breakout, but got to keep a real close eye on this 36 to 36.21 level.
UPS is getting killed on their earnings report here this morning, and when the stocks get killed, the fade doesn't work nearly as well, because there's usually stocks when they get killed, they're getting killed for a reason. It's we should just clarify that it's been the fades that have been rallying that haven't been holding, because the ones that have been selling off sometimes continue to sell off. UPS trading at 75.15 right now. That is getting absolutely rocked. 77.95 is where it closed. The numbers, they missed by a couple of cents, I believe. 115 against estimates of 117. So when they miss, they really rock them. You look back to June 26th, we had a low of 75.62, but below that could start to open up.
Yeah, I see a low on June 7th at 75.24. I guess this will be interesting. We'll kind of get to test our theory out here on this stock today. You do have as soon as the earnings were announced, it hit 76 and is now just kind of a slow melt here down to the 75. You don't have like the spike bottom and then the slow crawl up with this one yet. But for those traders that are going to be trading in UPS today, keep an eye on it. Currently, the pre-market low is 74.77. Because you take a stock like McDonald's yesterday, it hit 88 in the pre-market, and it was all over the map during the day. But lo and behold, when it came back down, it only got to 88 and a quarter. So for those traders, like I said, being in UPS, try and keep an eye. Right now, the current low is 74.77. Pretty good volume associated with that, so that should be a good swing number.
If you're trading the drugs today, you want to be aware of this one. Pfizer had a drug, just announcement on their Alzheimer's drug there. Failed the initial study. Elon is working with them on this drug. ELN is getting killed on the news because this is a huge drug for them. This is going to be their major moneymaker. Obviously, Pfizer has lots of other drugs in the pipeline, so it's not down nearly as much, but is trading 23.35. Take note, Lilly is down too, because they have a similar Alzheimer's drug that might actually, obviously they're concerned that if the Pfizer drug failed a study, then maybe the Lilly drug's going to fail a study. And we're not saying the drug isn't going through, but it failed the initial study, which is never good. So Lilly is actually trading down a buck here too, just in sympathy with this overall news.
Yeah, the drug stocks, you always got to be wary of these trials. Pfizer, took a look at that stock the week I was gone, just rocketed up from 22, almost got to $24, 23.87. It's kind of pulled back. Trading at an interesting level right now, trading at 23.30. That's just right near yesterday's low. I'd keep an eye on that 23.38. Nice half number up to 23.5. If they can't get above that, I look for it to come down and test 23.10. Looking at the pre-market activity, whoa, no way. Did this thing get to 22.50?
It might. That's the fades, man. Like, there is just definitely overshooting on that one. It's bouncing here and now, so there's another one of those fades. Yeah, I seen it trading in the 22 handle, so it doesn't surprise me if it did get as low as 22.50. It was trading under 23 an hour ago.
22.41.
Wow.
A little bit. I mean, anybody that makes a sale on that stock that trades millions of shares a day just must totally be out to lunch, because there's just, I mean, for that stock will take a week to move back down to 22.41. But look for major support in this thing at 23.10, and I mean, based on the trading as low as 22.41, and now back up in the mid 23 handle. Maybe I ought to be taking a look at a short and this one off the open.
Let's quickly highlight Apple. They're obviously going to report earnings here after the bell. Had a breakdown day yesterday, but then it caught a bid around 10:30. Just started to take off. Stock rallied all the way back up to actually, but did it end up closing up on the day? 603.83.
Yeah, it did.
That's
It
crazy
did.
because we were down. So that had what, a 17-point rally off the lows.
Yep. It hit 587.71 and then came back to 605.90.
Wow.
Let's keep an eye. This whole 605
Yeah.
area, 604.30 was the close. 605.90 was yesterday's high. Trading smartly above that in the pre-market. For those of you who want to try a long in this stock, I wouldn't let go. If it gets down much below 605, you may want to reevaluate that trade. There's a lot of air in this thing, as always, because you have the 2-day high here at 614.44, the 3-day high at 615.35. So basically, this thing can go anywhere between 590 and 615, and we're all waiting on the earnings.
It's going to be interesting. So, what's your overall thoughts here on the market? We obviously breaking down there. This overall trend's kind of still intact, but it's starting to get sketchy.
Yeah, we talked about this trading range. We got near the upper end of the trading range last week. Was hoping some decent earnings could push us through that 1375 level. It didn't happen. In just 3 days, we gave back over a week's of gains. Just trading really in no man's land here. I'd keep an eye on the Globex high here. It's 1345.75. That's just a little above the close. I would not get real bullish until we got above and held the 1345 level. Coming back on the downside, all you have is currently the Globex low at 1337. Not a real significant level, but you have excellent support at Monday's low at 1332.
We're all going to be waiting on Apple, and that's obviously going to dictate where we head probably going forward. Apple affects everything. Everybody watches Apple for sentiment, so keep an eye on those Apple earnings tonight, and we will be back with you tomorrow.